Hello, good evening, everyone. Welcome to Business Live. Coming up in this bulletin, COCOBOD explores a new funding model to reduce export of raw cocoa beans after government failed to pay cocoa farmers.
So we, together with the Ministry of Finance and Government, have been thinking through a new funding model. A funding model which also will not make us be obligated to sell our beans raw.
We will be exploring the best way forward and steps government and COCOBOD needs to take to manage the situation effectively. Also in this bulletin, President John Mahama pushes for robust reserves build-up to help Ghana withstand global economic shocks and commodity price volatility.
One of the things we need to do is to build our foreign reserves, which is what we're doing in Ghana. In 1 year, we've moved our reserves from $8.9 billion to $13.4 billion in 1 year. We want, over the next 3 years, to increase our reserve position to beyond $20 billion.
Plus, firms reveal high cost of doing business despite slowing inflation and improved economic indicators, a development impeding significant cut in prices of goods.
The kind of inflation we are experiencing now, for me, is unique in the sense that I describe it as a broad-based inflation. So if you look at the inflation structure, and of course I think the GSS from Professor Nim's time to this, they have done well.
These and more we have for you this day. Thanks so much for your time. I am Pius Kojobaka. And look now at our stories. The Ghana COCOBOD, in collaboration with government and financial sector players, is exploring a new funding model aimed at reducing the country's reliance on exporting raw cocoa beans and boosting value addition within the industry. Chief Executive Officer of COCOBOD, Dr. Randy Abe, who disclosed this at a press briefing, said the proposed framework is expected to transform how the cocoa sector is financed. Here's a report.
According to the Chief Executive for COCOBOD, the new model will help Ghana move away from the traditional system where cocoa beans are largely sold in their raw state to raise funds for the season. Instead, the strategy seeks to promote domestic processing, enhance industrial capacity, and allow the country to capture more value from its cocoa resources.
So we, together with the Ministry of Finance and Government, have been thinking through a new funding model. A funding model which also will not make us be obligated to sell our beans raw, because under the syndication, you would have to sign contracts for the raw beans, and that is what you use as a collateral. And therefore, if, for example, you were going to do 600,000 tons and you were committing 500,000 tons to sell to buyers as raw beans, how can you in the same breath be speaking about value addition when you know that you're committing about 70–75% of your crop to go as raw beans? Meanwhile, you're also touting 500,000 processing capacity.
He further said the regulator is urgently exploring measures to support cocoa farmers as they face mounting economic pressures. Mr. Abe also acknowledged the difficult conditions confronting producers across the country, assuring that efforts are underway to provide relief.
We appreciate what the farmers are going through. We know that these are very, very difficult times, but we appeal that they keep faith with us. We would find a solution very, very soon, and we'll be able to then deal with all these issues. But just to I'm just explaining all these things for us to appreciate why we are where we are, and to say that we really, 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 we are not doing anybody a favor. I mean, it is their sweat. They deserve to get their money. They work hard for it. We will ensure that they get exactly that. But this is the situation that we are dealing with. And just to put things in perspective, look, in 24-25, when the price was set in September, the exchange rate that was used was 16 cedis.
The Ghana Cocoa Board also responded to allegations that funds intended for cocoa farmers were used to procure vehicles for management, insisting.
And we know the issue about cocoa payments have been topical in the past couple of days now, and we want to explore that angle and bring in an economist who is also a senior finance lecturer at the University of Cape Coast Business School, Seram Kawo. Thank you so much, Doc, for making time to join us here on Business Live. For you, how would you assess the current developments in the cocoa industry? Shall be joined by a senior finance lecturer at the University of Cape Coast Business School, Seram Kawo, to speak to us on the subject matter. Seram, thank you so much for making time to join us this time around. And I was asking, for you, how would you assess the current developments in the cocoa industry?
All right, thank you very much. Good evening to you and the viewers. The current situation is multifaceted. It has both micro and macro implications on the Ghanaian economy. Let's look at it from the micro level first. When you look at it, there's an immediate impact on farmers and households. What is this impact? Farmers and households will have a cash flow crisis. They are unable to get the needed amount of money to meet their basic necessities of life: food, clothing, shelter, healthcare, education. They will not be able to get this because we know most of the farmers depend on the farm for their produce. There is going to be rising indebtedness. Most of these farmers are able to get loans to do the farm, or they procure some inputs on credit with the hope that after the farming season, they will be able to use these monies to pay. Now, if there is a delay in the payment to these people, there will be penalties that will come in, their collaterals will be seized, and it will have future impact on the farm that they are going to have. In addition to that, they have to maintain the farm and prepare for the next farming season. And so because they do not have money, that can also affect them. Psychologically and socially, they are also going to be desperate when they have to abandon the farm altogether. Now, there will be effect on the cocoa production and future harvest that the country would have. If the farmers are unable to prepare for the farming season, it means that future yield will be low and the season production will not meet the needed expectation because labor will have to be affected, and also farm inputs will not be procured in the medium term. And there will be a threat of rehabilitation. That rehabilitation and replanting of trees will also be affected. And what will happen to the farmers is that they will be smuggling, and then they will be side selling the beans to other people. That will result into smuggling. The license buying companies would also be affected, and it will have effect on rural financing. What am I talking about here? The license buying companies will have liquidity constraints because most of them pre-finance this cocoa purchasing from loans from other institutions. And once they cannot pay promptly, that will also affect financial institutions not willing to give them loans in the future. And therefore, there will be some level of retrenchment on rural financing of their activities. Their operations will be disrupted because the clerks in some districts will now collect the beans with the hope that there will be future payment. And if that is not coming, that will also affect. Now let's look at the macro and fiscal implications on the country, Ghana. When we look at the future implications, there will be pressure on the foreign exchange of the country. Cocoa is one of the biggest earners in terms of foreign exchange. If there is delays, it is going to reduce production in the future. And what will happen is that we are going to encourage smuggling of the produce that we have. And that will put pressure on the exchange rate and external reserves of the country.
And I appreciate your thoughts on that. But as we make progress, what's in your view is the best way forward, and what steps should COCOBOD, for example, take? Yes, they've mentioned that they intend to, outline a new financing model. Do you think that will work?
You see, that is coming too late now. It's coming too late because we know the situation. We cannot wait for several years, and now that we are planning to add value to the produce that we produce in the country, when the syndicated loans could not work, simply because we are not paying the farmers, and then that results into some debt accumulation that we have. But immediately the COCOBOD, the Ministry of Finance, should immediately find money and pay these farmers, and then start at the factories that will produce this particular produce that we have. There are some factories that are producing the cocoa that we have in the country, but some of these factories are not big enough. So we cannot continue exporting our raw materials and expect to get a different thing. What we need to do is to add value to our produce. And cocoa is one of the things that we cannot joke with. And that if we add value to our cocoa beans, what will happen is that we're going to create a lot of jobs, and then we'll increase the foreign exchange earnings of these companies and the farmers that are in that particular sector.
But do you think in the interim, this financing model the CEO is talking about will work?
In the interim, it's going to be very difficult. It's going to be very difficult because you are going to look for funding, and the funding and the people that will do it. And you are adding value. You are adding value. What are the factories ready to add that particular value to it? What are we doing? Because setting up a factory and adding value to the product will not take immediate effect. It will take some time before that happens. I don't see that happening in the next farming season. Because in the minimum, it can take about a year to get the factory and all those things that we want to do in place, except we get some big financiers in the sector that are ready to put up big factories that will add value to the beans that we have. In fact, we should not underrate the cocoa sector. The cocoa beans itself, everything about that is used for several items. The value chain is very enormous. And so government needs to make sure that they put everybody in that particular value chain together. There are some industries that use the cocoa bean for our skincare products and all the rest. So they should bring all of them together. The smallholder farmers and then the production companies that are there, they must bring all on board.
All right.
I'm aware of some of the companies that are using these cocoa beans and then the powder for other things where government is not even supporting them in that particular sector.
Very well. Thank you so much, Sir Mkawo. I'm grateful you could make time to join us here on Business Live. He's a senior finance lecturer at the University of Cape Coast Business School. Now, President John Mahama is pushing for robust reserve build-up and improved business environment to help Ghana withstand any global economic shocks and commodity price volatility. Gold prices have been declining over the past weeks on the international market, as well as the dollar recovering strongly. But speaking in an interview after his 3-day state visit to Zambia, the president noted that going this way could help Ghana withstand the economic shocks.
The similarity of the trajectory on which both our countries have been. He took around a difficult economy and has been implementing quite bold reforms to turn the economy around. And results are beginning to show in terms of lower inflation, stronger value of the Zambian kwacha and all that. The macroeconomy is looking better, the investment environment is looking better. And it's exactly similar to Ghana. Like Zambia, we also just came out of a debt restructuring. I also inherited a very difficult economy. inflation at 23.4%. The local our currency, just kept depreciating in value. And aside from that, investor confidence was low. Foreign direct investment had gone down. And so we've all been implementing quite bold reforms. And in Ghana, as in Zambia, the turnaround has happened and results are beginning to show positively. One of the things we need to do is to build our foreign reserves, which is what we're doing in Ghana. In 1 year, we've moved our reserves from $8.9 billion to $13.4 billion in 1 year. We want, over the next 3 years, to increase our reserve position to beyond $20 billion, so that if anything happened, we would have enough buffers in terms of our reserves to be able to tide over whatever shock it is. And so I think that one of the things to do is to build the foreign reserves.
This is still Business Live. We have more for you shortly. Hello again, welcome back to Business Live. Enterprises have revealed that the cost of doing business is still very high in the country. This is despite the continued slowdown in inflation rate and improved economic indicators over the past 1 year. This, they say, has affected their ability to significantly reduce prices in line with current developments. Mark Beduabwaji is the Chief Executive Officer of the Ghana National Chamber of Commerce and Industry and has been speaking on PM Express Business Edition.
I interrogated the numbers and I realized that even for the slight increase in the PPI from 1.3 in November to 1.9, the industrial sector recorded a PPI of 2.1. So the PPI of the industrial sector is being higher than the average. Industrial sector, most of the manufacturing sectors are there. So when you take an inflation numbers, don't just look at the average inflation. Look at the outliers. Look at some of these key variables that will affect the other variables as well. So if the industrial sector's PPI is very high, obviously you expect that it means the cost of production is high. So if it's selling the tea to you on the factory gate at 1.9 and they add all these things, you get that inflation. So if the PPI should go down, cost of production should go down, and we're able to manage those middlemen, obviously you will see the effect. Look at the producer price index. So the PPI actually increased from 1.3 in November to 1.9.
Yeah.
In simple terms, it's what we call the factory prices, the price that a producer, looking at its cost of production, will give the product to you. Between the producer of 1.9 to inflation of the 3.8, those processes, transportation, taxes, middlemen, they constitute that part. So it doesn't mean that those who are producing are so wicked. But let's look at those who are also with the middle people.
The Bank of Ghana has charged all participating institutions of credit reference bureaus to actively submit data on loan defaulters. This was captured in a notice issued by the Financial Stability of the Bank of Ghana. More in this report.
The notice maintained that sharing information on the financial and credit history of individuals is very important in helping improve credit reporting in the country. The Bank of Ghana again argued that this is critical in better assessing the credit risk of each borrower, a development that should go a long way in reducing the cost of credit in the country as well as non-performing loans. For some, it is not clear for now what has influenced this announcement, but some have argued that these firms are still not complying with the laws covering credit reporting in Ghana. There are currently 3 credit reference bureaus in the country.
Vessel Merchants Bank UMB has launched its revamped mobile application, the UMB Speed Up. The redesign marks a significant milestone in the bank's aggressive digital transformation strategy, which aims to provide faster, smarter, and more secure banking. Speaking at the launch, Tubo Ofe Ajiman, head of e-business at UMB, stated that the new app offers customers a more convenient and safe way to bank remotely. Here's a report.
The revamped UMB Speed app represents a major leap in the bank's digital transformation agenda, engineered to make banking faster, smarter, and more secure. The new platform provides a smooth, user-friendly experience that simplifies daily transactions with cutting-edge digital features to enhance customer satisfaction. Tubo Ofe Ajimang is the head of e-business at UMB.
We built this app different from what we already had, and we looked at some of the challenges that customers encounter that they have to walk to the bank to do. The first is the complaint feature that I indicated that usually you have customers walk to the bank to complain. Now you can use the embedded feature on the app to be able to lodge complaints. Aside that, you don't need to add a new account by coming to the branch. The app automatically picks up all your accounts. But more importantly is the self-service on password reset feature. In instances where you have a forgot password, you can definitely use a feature where you indicate a security question or an answer to be able to reset a password for you. So we looked at some of the services on the old app that you have customers walking to the branch to do, and we've corrected it with this new app.
UMB Speed app offers customers a more convenient and safe way to bank remotely. Tubo outlines fortified security features on the app.
There are several security features that we have embedded onto the app, right? Now the first bit is that you can actually download the app on the Play stores or the Android app stores. And aside that also, you can enable a biometric feature on the app, right? That makes it, additionally very more secure because you use your Face ID or a thumbprint to be able to log in. You also require a password to be able to log in. So aside the password that you use to log in, you also need the transaction PIN to be able to complete the transaction.
Meanwhile, Adam Naite, head of corporate communication at the bank, emphasized their commitment to drive innovation and deliver service excellence.
Speed for us will mean speed itself, then the P is for passion, we have E for excellence, another E in there for ethics, and then diligence. That's the promise we're giving to our customers. And we've given them this brand promise since 1972. So we serve them with speed, with passion, with excellence, with ethics, and also with diligence.
Management say a dedicated customer service team will be on hand to provide solutions to customer queries. UMB continues to cement its position as one of Ghana's most innovative financial institutions, consistently leveraging technology to redefine banking experience.
Glad you could make time to watch Business Live for today. I am Pius Kojobaka. Let's connect same time next week. Beyond the number.